Okay, welcome to the deep dive. This is where we take that pile of information, you've got maybe articles, research notes, and really boil it down to the core insights. We help you cut through the noise fast.
Exactly. The idea is to give you the essential context and the key takeaways from your sources so you get the knowledge without needing days to dig through it all yourself.
And today, we're diving into something central in the crypto world, Bitcoin and Ethereum. Specifically, we're looking at where they stand here in mid-2025 based on this really interesting article you shared.
Yeah, it's a great source, gives a really good snapshot of how these two giants have evolved and where they are right now.
So our mission today is pretty straightforward. Let's unpack the key differences, the market dynamics, the future outlook for Bitcoin and Ethereum as laid out in this article. We want you to leave with a clear grasp of what makes them tick and what the source thinks is driving them now.
All right, let's jump in. I think the article's main point right off the bat is, look, they're both built on blockchain, sure, but they were created for really different reasons, and their technology has gone down quite different roads.
And it really hits on something important, how macroeconomic forces are now major players for both, but in different ways. Bitcoin is increasingly framed as that, potential inflation hedge.
Right. While Ethereum seems more linked to overall market liquidity, maybe tech sector vibes, because so much of its value comes from the actual activity happening on the network.
Yeah, exactly. So the source goes through their origins, the tech differences, how they've performed in the market, what people actually use them for, the communities around them, how investors see them, and the long-term picture. It gives us a solid structure.
Okay, so where did these paths diverge? Let's start with the origins, the core ideas behind them, according to the article.
Bitcoin first. The article points back to Satoshi Nakamoto, the 2008 white paper, the 2009 launch. The core problem was, how do you do digital transactions peer-to-peer securely without needing a bank in the middle?
Solving that whole double spending problem. It was pretty groundbreaking.
Definitely. And the source notes, it started with, the crypto enthusiasts, libertarians, but it pretty quickly evolved into this idea of digital gold.
And that framing is crucial. The article highlights the fixed supply, only 21 million Bitcoin ever, and this focus on security, censorship resistance, scarcity. That hard cap is fundamental to why people started calling it digital gold.
Okay, now contrast that with Ethereum. Vitalik Buterin's proposal in 2013, launch in 2015. Ethereum wasn't just trying to be another digital currency, was it?
No, not at all. The vision was way broader. Ethereum brought in smart contracts, basically, code that executes automatically on the blockchain. That really shifted things.
Yeah, it turned the blockchain from just a transaction ledger into like a programmable platform.
Exactly. The article calls this foundation for programmable money and Web3, enabling all these decentralized apps or dApps.
And it grew fast. The source points to Ethereum becoming central to this whole decentralized web idea, driven by a really vibrant, active developer community.
So you got Bitcoin, secure, decentralized value transfer, fixed scarcity, digital gold, and Ethereum. This general-purpose platform for complex apps, smart contracts, like a world computer. Very different philosophies from the get-go.
Right, and those philosophies directly shape their tech. Let's dig into those technical differences the article highlights. Consensus mechanism is a big one.
Yeah, Bitcoin sticks with proof of work, POW. Miners use computing power, lots of energy, to solve puzzles and validate blocks. Super secure, time-tested, but yeah, energy intensive. That's the trade-off they made.
But Ethereum made that huge switch in 2022, the merge.
Moved to proof of stake, POS. So instead of mining, validators lock up or stake their own ether to secure the network. The article mentions it cut energy use by, over 99%?
Wow, okay.
And it was a key step towards making it more scalable, too. It really shows their different priorities. Bitcoin doubling down on POW's proven security, Ethereum going for sustainability and future efficiency.
And the speed, block time, transactions per second, also different on the base layer, right? Bitcoin's around 10 minutes per block, maybe 5-7 transactions a second. Can get slow and pricey when busy.
Ethereum's faster on layer 1, yeah. About 12 seconds per block, maybe 14 transactions a second, based on the article's numbers. But, and this is a key point the source makes, neither of these base layers can handle massive global scale on their own.
Ah, okay. So both rely on scaling solutions built on top. Layer 2s.
Exactly. For Bitcoin, the article talks about the Lightning Network.
Right, the off-chain thing for fast, cheap payments.
Yeah, instant, super low-cost microtransactions. And the source notes by 2025, Lightning is being used for more than just simple payments, too.
And for Ethereum, it's these layer 2 rollups, Arbitrum, Optimism, those names you hear, plus plans for more base layer upgrades like sharding.
Right. Rollups handle tons of transactions off the main chain, then bundle them up and settle them securely back on Ethereum. So the strategy is similar, actually. Move the bulk of activity to Layer 2 for speed and cost. Use Layer 1 for security and final settlement.
Okay. What about smart contracts? This seems like Ethereum's real differentiator, according to the source. Bitcoin scripting is limited, prioritizing transaction security.
Yeah, Ethereum is Turing complete. Basically means it can run almost any kind of program via smart contracts. That's what enables DeFi, NFTs, DAOs, gaming, all that stuff.
So, Bitcoin for censorship-resistant money, Ethereum for censorship-resistant applications. Is that a fair summary from the article?
I think that captures it pretty well. Bitcoin is programmable money. Ethereum is more like a programmable platform for building, well, almost anything decentralized.
And their economic model is the supply, totally different. Bitcoin, hard cap, 21 million, period.
Yep.
Reinforced by that 2024 having that cut the new supply rate, scarcity baked in.
Yep. Ethereum, no fixed cap. New Ether is created to reward those POS validators. But, and this is key, the article highlights EIP FinFin 59, which burns a portion of transaction fees.
Burns them, like destroys them.
Permanently removes them from circulation, yeah. So the supply becomes dynamic. If the network is really busy and lots of fees are being paid, more ETH could potentially be burned than is newly issued.
Making it deflationary sometimes.
Potentially, yes. It ties the supply dynamics directly to how much the network is actually being used. Very different from Bitcoin's predictable program scarcity.
Okay, let's pivot to the market side. The article really stresses how these differences affect how they behave in the broader economy now.
Yeah, back to the macro influence. Bitcoin acting as that potential inflation hedge. Ethereum reacting more to liquidity, tech sentiment, because its value is so tied to usage.
The source gives some interesting price points up to May 2025. It says after the 2024 halving and those U.S. spot Bitcoin ETP approvals, Bitcoin held up relatively well, right? Up about 16% through March 2025.
Yeah, showed some resilience. But check this out. The article says Ethereum dropped around 50% in that same time frame.
Whoa, 50% drop? That's huge. What does the article say was going on there?
Well, it suggests that initial period saw a ton of capital just flood into Bitcoin. The ETPs made it easy for traditional money to get exposure, plus the halving narrative was strong. Bitcoin's simpler digital gold story seemed to grab the spotlight first.
Okay, that makes sense. But then things shifted. The article mentions a recent Ethereum surge.
Right. In the week leading up to the article's date, May 30th, 2025, it says Ethereum jumped over 50%.
So very volatile and different things moving the needle for each.
Absolutely. It suggests Bitcoin got the initial boost from those clear financial products, but Ethereum's value is more fundamentally tied to its ecosystem activity. When that shows strength, or maybe when regulatory clarity improves for ETH2, money flows back.
Let's break down the source lists, market demand and adoption.
For Bitcoin, demand often spikes with economic uncertainty, people looking for that hedge. For Ethereum, demand goes up when DeFi activity booms, or there's an NFT craze, or people just need ETH to do stuff on the network.
And the article mentions that by 2025, you're seeing broader adoption globally. Individuals, companies, even some governments starting to engage with both, but for different reasons.
Then there's tech upgrades. Bitcoin halvings are built-in supply shocks. Things like SegWit or Lightning improving usability help too.
And for Ethereum, big milestones like the merge or progress on scaling with rollups and future sharding plans signal increased capability and often boost sentiment. That fee burn mechanism, EIP 1559, also plays a bigger role as usage grows.
And finally, investor sentiment and macro. This is the short-term stuff. News cycles, big institutions buying in, like with the ETPs, regulatory news, good or bad, hacks, general economic fear or greed. Bitcoin might catch a bid on inflation scares. Ethereum might rally if a new killer dApp takes off.
Okay, this is where it gets really practical. How do these differences play out in actual use cases today, according to the article?
Yeah, the source draws a clear line. Bitcoin, primarily digital money and increasingly seen as a store of value. Sure, it's used for some payments, remittances, but
its main role in 2025, the article stresses, is as that potential store of value, a digital reserve asset held by people, companies. The source even mentions nation-states considering or holding it. The scarcity makes it attractive as a macro asset.
Right. Ethereum, meanwhile, is the engine for that huge dApp ecosystem.
The article lists examples, DeFi platforms like Uniswap for trading, Avav for lending. The NFT market is mostly on Ethereum, DAOs, blockchain games, even some decentralized social media experiments.
And crucially, most stablecoins like USDC, the digital dollars, live primarily on Ethereum. That makes it a really important settlement layer for global value transfer.
And future potential. The source mentions institutions looking at Ethereum for tokenizing real-world assets, stocks, bonds, funds, putting them on the blockchain.
Exactly. So Bitcoin's secure, scarce digital asset. Ethereum, the workhorse platform for a programmable digital economy. Different jobs, really, maybe even complementary ones.
And the communities around them reflect this, right?
Totally. The article paints Bitcoin's community as pragmatic, very security conscious. Development is slow, careful, focused on the core protocol, and scaling like lightning that doesn't compromise the base layer's principles.
It's got this whole ecosystem, exchanges, miners, custodians, nonprofits working on development. Lightning itself has spurred innovation on top of Bitcoin.
Ethereum's community. The source describes it as much more innovation-focused, collaborative. Things move faster. You have the Ethereum Foundation EIPs for proposing changes, constant hackathons, tons of teams building dApps and layer 2s like Arbitrum, Optimism, Polygon.
They seem to embrace experimentation more, leads to rapid progress, but the article implies it can also lead to growing pains, like congestion if scaling tech doesn't keep pace.
And the article notes both are increasingly engaging with traditional finance now. Bitcoin via Lightning and fintech apps, Ethereum with institutions using its network for settlements or asset tokenization trials.
So one community hardening the digital gold, the other building the decentralized app store, maybe.
That's a decent analogy, yeah. Which leads nicely into how the article frames the investment case for each.
How does it position them for potential investors? Bitcoin first.
Primarily as that potential store of value, the scarcity, the perceived hedge against inflation or instability, its independence. The ETPs are a big deal, making it easier for traditional money to get involved.
Diversification benefits too, the article notes, though it warns about volatility. By 2025, it's clearly something being added to portfolios by institutions, funds, even pensions, alongside retail investors.
Ethereum's framed differently. It's more of a bet on the growth of the decentralized internet itself, on programmable finance taking off.
Its value comes from being the essential infrastructure for DeFi, NFTs, maybe those future tokenized assets.
Exactly. Plus, the move to proof of stake introduced staking rewards. The source mentions yields of maybe 4–6% annually, which adds an income component.
And that fee burn, EIP 1559, adds another layer. Not fixed scarcity like Bitcoin, but this potential for deflation tied to actual network use.
Right. The article says institutional interest in Ether is growing too, with Ether ETPs also becoming available. But it suggests Ethereum might be seen as carrying a bit more complexity, maybe more execution risk, because its tech roadmap is still unfolding, and it faces more direct competition than Bitcoin's unique niche.
But here's a really key point the article makes. It's not necessarily an either choice for investors, is it?
No, exactly. It highlights that many investors are actually choosing to hold both.
Why? What's the rationale there?
Well, it lets them capture both narratives. You get exposure to Bitcoin as the potential digital store of value, and you get exposure to Ethereum as the platform driving Web3 innovation. It's a way to balance the different kinds of opportunities and risks.
Okay, last section. Long-term outlooks. According to this source, what does it see down the road?
For Bitcoin, the outlook is described as relatively straightforward. The halvings keep reducing new supply, strengthening that scarcity appeal for long-term holders. Institutional adoption builds the digital sound money case.
And the slow, conservative development path means fewer chances of major protocol screw-ups. Its success hinges on becoming widely accepted as that digital hedge or reserve asset.
Ethereum's future looks more complex, according to the article. It leads in dApps, no question, but it has this ambitious roadmap, fully scaling via roll-ups, implementing sharding that needs to be executed well to keep growing.
And the source raises some interesting points about that shift to roll-ups. Like, where does the value end up? Does it stay mainly on the main Ethereum chain layer 1, or does most of it move to the layer 2s?
Yeah, there's apparently some concern noted in the article that the base layer could become just a commodity backbone, settling transactions for L2s, potentially affecting ETH's own value accrual if not managed carefully.
Plus competition. Newer layer 1 blockchains are still trying to grab market share, which the article says has nibbled at Ethereum's dominance and led to debates about economics, like how L2s should contribute back to the main chain's security and value.
But the source also notes Ethereum keeps evolving. It mentions upgrades like Pectra and points to things like falling fees on layer 1 in early 2025 as signs it can adapt.
So, summarizing the outlooks,
Yeah.
Bitcoin leans on simplicity and scarcity for a perhaps steadier, maybe lower risk profile, while Ethereum offers broader potential but faces more uncertainty and relies heavily on executing its complex tech upgrades and fending off rivals.
That seems to be the gist of the article's perspective, yeah. Bitcoin's success is about adoption of its core narrative. Ethereum's is about continued innovation, scaling, and ecosystem value capture.
Okay, let's wrap this up. Pulling it all together from the source. Bitcoin and Ethereum, both blockchain-based but really distinct. Bitcoin, the secure, scarce potential store of value, the digital gold narrative solidifying. Ethereum, the engine for the dynamic dApp world, building Web3.
And by mid-2025, the article shows they both matured a lot. Bitcoin gaining traction with institutions as a macro asset. Ethereum pushing technical boundaries, powering everything from DeFi to NFTs, and looking towards tokenized real-world assets.
And crucially, the source suggests they're not just competitors. Many see value in holding both, balancing that store of value play with the platform innovation play. It's still a volatile space, clearly, but the underlying message seems to be these are foundational pieces of how finance and tech are evolving. Staying informed is key.
Yeah, it's a fascinating landscape, and this article gave a really useful framework for thinking about where things stand right now.
So here's something to think about for you, the listener. Given the article suggests many investors hold both, how might the ongoing technical evolution of each, think Bitcoin's layer 2 growth with Lightning and Ethereum's big strategic shift to becoming primarily a settlement layer for its own layer 2s, how might that fundamentally change the relationship between these two giants? Will they become more complementary, more competitive in different ways?
And how might that shift influence how you think about their individual roles and maybe their combined role in the wider financial world going forward?
Definitely something to mull over as you continue your own deep dive.